Hello, everyone, and welcome to Tuesday morning. It's Stephen Whiteside here from theuptrend.com. In the pre-market this morning, stock index futures are trading around fair value. Also, commodities are trading around fair value. We've got gold up a couple of dollars while crude oil is down slightly in the pre-market. Now, we've got some economic numbers coming out at 8:30 this morning. They're probably not enough to throw the market around too much. We do have the Fed chairman speaking today, and that could have a lot more effect on the market. Now, the VIX made a new high on Monday, and things would change on Tuesday if the VIX were to close below 1461. Not expecting that to happen, so now we've had 10 days of fear, 10 days of the VIX being on a buy signal. That has put downward pressure on the stock market. The Dow seems to be leading the charge to the downside, breaking down below the 100-day moving average yesterday and heading towards our first price target of 375. 375 was a significant number last year as we drove up to it in December. You can see we clustered around it for about a month before breaking out. And of course, we always talk about the fact that stocks usually fall 3 times faster than they rise. And when we look at this chart, you can see how long it took from when the Dow broke out above 375 to get up to the recent high, and then how fast it's come down. And that's usually what we expect. That's why we want to be more aggressive sellers than buyers. Usually you've got more time to buy than you do to sell, and that's typically how things turn out. Looking at the S&P 500, big down day yesterday, breaking down below the 50-day moving average and heading towards the big round number of 500 for the SPY. And just below that is an open gap at 497.37. That could be a potential target. And if that breaks down, you can see the targets that we have below. Then looking at the NASDAQ 100, and the NASDAQ 100 popped on Thursday and ended the day on a buy signal. We come in Friday, the futures are down sharply. You don't have to take that buy signal. You can wait for the next close above the upper channel line. And here we are coming down hard on Monday. We've broken down below the 437.50 level, so our next target is 421.88. That acted as support back in February, and then you can see our additional targets if the market wants to continue lower from here. Now, the market looks totally different. If you look at the equal weighted NASDAQ 100, it certainly didn't generate a buy signal last week and was down sharply yesterday, as was the next generation NASDAQ stocks. They were down 1.44% as well. And then when we look at the mid cap, small caps, and micro cap stocks, they were all down hard on Monday. Now, one of the reasons that the market is down over the past couple of weeks has been the fact that the bond gods have been spooked. And we've talked about that recently. There's the 10-year note making a new low. There's the yield for the 10-year note making a new high. This is an international event. We've got the TLT in New York heading lower yesterday. We've got the XBB in Toronto heading lower. So it is an international situation, and you can see emerging market bonds gapping lower and moving down sharply on Monday, and similar situation for the junk bonds without the gap yesterday, but down sharply. So the bond gods are angry at the moment. They're spooked, and that isn't good for the stock market. Now, if yields are moving up, then anything consumer related is going to get hit hard. So consumer discretionary, consumer staples, we've got real estate, we've got retail, all heading sharply lower on Monday. Now, when we look at the Canadian stock market, it's held up better than the U.S. market and outperformed it in many ways because of the commodity situation with both gold and crude oil and other commodities moving up. The TSX is back on a sell signal, second day of a sell signal. The TSX 60 is on a sell signal right now. The mid-cap stocks are back on a sell signal as of Monday's close, as are the small caps, and then waiting for the micro caps, driving right down to the lower channel line yesterday. So we are starting to see some selling. What's holding the Canadian market up? Well, gold stocks have done well. We've anything mining related, base metals or the material sectors have all been doing well. Energy, of course, has done incredibly well, but is back on a sell signal as of Monday's close. Then, of course, other sectors of the market have been hit harder. and Infotech made a new low yesterday. When you look at this chart, if you go back, as soon as you see a lower high and then followed by some selling, that's usually a sign that the market's going to break down. So I always look for that. The first sign something bad is going to happen is the fact that we put in a lower high. And that is also true for real estate. You can see we put in a lower high and then started to move down. So the fact you put in a lower high doesn't mean anything. It's when it's confirmed, when you continue to move lower. That's when things start to unfold. It's not exactly the day that it makes the lower high because nothing's confirmed at that point. You don't know the next day it could break through that high. It's after things start to roll over that you can see that, I think the investors in this particular sector are not that confident of the future. Then, of course, we've still got telecom stocks not doing well, even though TELUS generated a buy signal last week. The rest of the sector is not moving with TELUS. And then the financials have broken down. Then last up, taking a look at the Canadian financials, they were down hard yesterday. And when I say down hard, just 0.59%. Remember, the financial sector is a lot less volatile than anything commodity related, so 0.59% is actually a big move for this sector. The dog of the banking sector is still the TD Bank, unfortunately, in 2024, and the biggest loser on Monday was Bank of Nova Scotia, down 1.42%. You can see that's a big bar for this particular stock. Okay, folks, that's all I wanted to cover this morning. It looks like the market wants to wait for the Fed chairman to speak. Next time you'll hear my voices on Wednesday morning, and at that time we'll walk through the most actively traded stocks on both sides of the border.
Thank you for watching today's presentation. If you found this video useful, please consider hitting the like button, sharing it, and subscribing to our channel to ensure you never miss a video. We look forward to having you join us for our next daily market update.